lot of people think of whole life insurance simply as really expensive insurance for death benefit. But the reality is, if you design and utilize a properly structured whole life insurance policy as a cornerstone foundational asset in your life, it can actually help you save money in several different ways. In this video, I'm going to cover the different ways that whole life insurance can help you save money. And ultimately, if you shift your thinking around utilizing life insurance and structuring your life from a different perspective on your finances and focus more on financial structure versus chasing big rates of returns, you start to realize the power that can give you in the results of your personal finances. And I'm going to show you exactly how whole life insurance can help you do that coming up next. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Let's get into this. What's going on, Cashflow hackers? It's Chris with Life 180. And in this video, we're going to be covering the different ways whole life insurance can help you save more money and become more financially efficient. Basically, go through the principles that I think everybody needs to know to be able to make a paradigm shift in their life about the role a properly designed whole life insurance policy should play in your life and what it can do for you. So let's get into this. Now, number one, the first things first is that it forces you to pay yourself first. One of the first rules of wealth creation is paying yourself first. Unfortunately, most people go through their working career, they earn their income, they don't save enough money, they don't pay themselves first. They focus on investing before they focus on saving. Their financial structure is kind of all upside down, and they're not focusing on the right things. This is one of the reasons I talk about in my Life 180 Pyramid video, the importance of financial structure. If you haven't watched that video, make sure you go check it out. So what do I mean when I talk about paying yourself first? Well, a lot of people understand that they need to save money. You know you need to invest, you know you need to save. But the problem is we go to school, we get a job, we start earning more money. And typically for the average American, as you start to earn more money, we start to take on more debts. We scale, we leverage, we get an extra boat, we get an extra car, we get bigger car payments, we take more vacations, and we run up credit card debt. And unfortunately, these are bad things. I can't tell you how many people I've run into that are not saving enough money, that people that make a couple $100,000 a year. And the bottom line is because they don't understand how to structure their finances, they wind up in a worse position. A lot of people believe that, hey, if I could just earn my way out of this situation, then life would be better, right? If I could just earn more money, if I'm making 65 or 70,000, if I could just earn 100,000, I'd be in a better position. Well, this is one area that I agree with Dave Ramsey when he says you cannot out-earn your own stupidity. Now, I would never call anybody stupid. These are his words, not my own. But the bottom line is he's kind of accurate when it comes to, like, if you've got poor financial principles that you're implementing at $50,000 a year of income, they're probably not going to change when you're earning $100,000 or $150,000 a year of income. Your bad habits and your bad behaviors, because of the fact that you don't understand your personal finances and you don't understand financial structure, they're just going to come with you, right? And so the purpose of what a whole life insurance policy can do for you is it's a forced savings plan. It's going to force you to take a percentage of your income and save it every single month. And I'm a big believer that if you design a policy properly, it should be utilized as an emergency fund for you and your family. Now, that leads right into number two, because it's a continuation of that conversation, is it's getting your dollars to perform more than one function in your life. It's multiple duties, right? That's what we're doing, is we're getting the dollar to perform multiple duties. And what I want to do is I want to go to the board here, and I want to talk about this, because think about it. When we're talking about going and having it perform multiple duties, this is what I'm talking about here, is that, okay, what do we know that we need in life? We know we need to save money. So we need to save. All right, we just covered it's going to save money. We know we need to save it. And if we have the plan of saving in a savings account, and then months go by, years go by, and you don't ever save as much as you want to save, that's the problem with the buy term and invest the difference philosophy. People just don't do it, right? Number two, and Whole Life fixed that. Number two, you know you need insurance, right? It just is what it is. You know you need life insurance. I'm just going to write life insurance because that's what we're talking about here. By doing a properly designed whole life policy, you're going to be saving money. You're going to be covering the death benefit and that money at the same time, right? So that is an important thing. So you know you need an emergency fund. Even Dave Ramsey will tell you you should have 6 months in a savings account. Well, if I could show you a way that a whole life policy would be able to be your emergency fund, it would be your savings account, which don't misunderstand. These are not necessarily always the same things. It will cover your life insurance. It could be an opportunity fund. So you could have access to you could have access to money for real estate investing, for business, whatever. You can have the equivalent of like disability, DI, we'll call it disability insurance, long-term care. We know we need to do that in the future. It can be your medical directive. You can get accelerated benefits if you become critically, chronically, or terminally ill with a lot of these policies. So medical directive, you control it. You get access to the life insurance while you're alive. So when we think about the different ways that your $1 is performing more than one function, if you put it into a properly designed whole life insurance policy, it can be your savings account because it's going to be highly liquid. That savings can then be utilized as your emergency fund, and as it continues to grow, it can then have a portion of it become an opportunity fund. Plus, when we think long term, you can utilize it for your needs in retirement when your health risks become greater. Or let's face it, even if you become chronically or terminally ill, if you get diagnosed with a cancer or something like that, which sadly I have had people run into this in their 30s, mid 30s to mid 40s, and that becomes an issue before you even think it will. It's a way to pass on money through a death benefit, through tax-free death benefit to your heirs, right? So it's a transition, and it happens on a guaranteed basis. If you do this with a term insurance policy, you're going to run out of time, and that won't happen when you hit retirement. It's a way to have what's called a volatility buffer in retirement. Right? So when we look at these things, now guys, I'm just going off the cuff here. I'm sure there's more than this. I was just kind of wanting to show you. I wanted, you can see here, I started with 3 ways, and it was going to be saving, covering your insurance, and basically emergency and opportunity fund into one. But when you start drilling deeper in ultimately the power and the leverage that a properly designed whole life insurance policy gives to you, you start to realize like this is one of the reasons, and I'm going to just do this really quickly. I talk about the importance of when you build your financial foundation, you want to build it on safety, right? And so when you build it on safety, what does that mean? It means save money first. You need your insurance, you need your emergency fund, you need your opportunity fund, right? And you need to make sure that you're covered there. You want to have all that handled, and then you can get into some medium risk stuff, right? And this could be long-term investing, it could be real estate, it could be, things of that nature, etc. And then we can get into the high risk, which is like growth stuff, crypto, stuff of that nature, right? Like it doesn't really matter. It's the high risk stuff, right? High risk. So when we start looking at this kind of situation, we understand that we need to build our life on a foundation of safety. Unfortunately, most people do it upside down. They go like this, and they start with a high risk, right? And they have this one little point of instability. They don't save enough money. They don't have enough safe money. Did you know that less than 65%, or more, 65% of people, I should say, have less than $2,000 in an account for emergency or opportunity? That is just an abysmal statistic. And the reason is people are saving in high risk accounts, and that, when the market's volatile and your whole life basically gets knocked over. You could feel like things are going really well for 10 years or so, and then it goes bad. When you utilize a whole life insurance policy, right? And by the way, your sub foundation here is all about cash flow, right? So you always want to be working on cash flow, and you want to use that cash flow to build your foundation. And if you utilize a properly designed whole life insurance policy as your foundation, you're going to have the most stable financial fortress as your foundation. Stable foundation, than any other asset that you would have. I always kind of tell people a properly designed whole life insurance policy is the only financial product in the world that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. So make sure you check it out. If you have any questions, please comment in the comment section below. I'm not going to keep beating this one too hard because I think it kind of speaks for itself. If you are somebody who kind of is thinking to yourself, I need to save money. I need an emergency fund. I'd love to have an opportunity fund. I'd love to get into real estate investing. It's one of the reasons I wrote my book, Cashflow Hacking. It's because I believe if everybody just focused on investing for cash flow rather than the buy and hold long-term investing strategy that has got Americans just coming up short with their goals, if you would just focus on cash flow, you'll get to where you want to be faster, more predictably. You'll have more control directly of the results in your life. But the only way that you can actually do that is by building your financial foundation on safety. And you got to save with the intent of investing, but you can't go out and invest too early. You got to be willing to slow down to go fast. And you'd be amazing that when you save properly out of the gate, then you can actually implement compounding in your life by investing in cash flowing assets and letting that cash flow compound on top of each other. Not only are you going to have better results, but your subconscious, you're going to believe that you can actually be successful in doing this. It's going to help you grow into becoming who you need to be to get to where you want to be. And this is one of the reasons I love this stuff so much. And so anyway, that is it. Hopefully that makes sense. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. And like I said, comment in the comment section below if you have any questions, any comments or whatever. Feel free to reach out. I've got a link down in the description below. If you have problems with debt, set up a call with our debt team. If you are interested to figure out how to build your financial foundation utilizing a properly designed whole life insurance policy as a savings alternative, as a banking alternative, if you will, I encourage you, get on with a clarity call with one of the coaches on my team. They can help you have complete clarity about what you need to do and help it make sense to you, because I'm a big believer also you should never put your money into anything you don't understand. And so that's it for now. Have a blessed, inspirational day. We'll talk soon.